Okay. Well, again, welcome back to class. This section here in our costing methods, right? We're going to be looking at the very, very last one, which is called weighted average. And like I said earlier, I mentioned it. It is by far the easiest concept, all right? And I'll let you know what I mean, okay? So again, we looked at the other two, which was FIFO and LIFO, where we actually had to keep our costs separate, right? We didn't make sure that every time we make a purchase of a batch of items, right, that we are continuously keeping track of our cost per item, right? We want to make sure that we have specific batches, so then when we do sell our items, we keep track of it depending on which method we use, right? Whether do we start from the bottom batch or if we start from the top batch. In this case, right, with weighted average, right, we don't care the price it costs for us to make the purchase, because at the end of the day, what's going to happen is we're just going to tally up all that we have. We're going to tally up all that the total cost it took us to make that item, and we're just going to divide it evenly out to get an average cost per item. And that's what's going to be different in regards to formula-wise. So instead of doing a cost per item for every single batch that we encounter, we can eliminate that because we don't care to keep track of those batches. We care at the end when we get our total, and we're going to divide it evenly across. So this is where the formula here is going to be, we're going to be determining the average cost per item, which you're going to take your total cost and divide it by your total quantity. All right? Everything else is the same. Okay? So let's go ahead and dive into this example here. Here we have that for the following items, journalize the scenario. So on June 1st, you made a purchase of 100 toys at $1.25 with the freight of $25. Okay, so again, here we recognize this. It's just as standard, right? You're just journalizing the entry that you made a purchase. So in this case, purchase expense and freight expense, and we're just going to assume it was on an account. Now we bring it to our table where we can actually do the proper calculations. So again, 100 times $1.25 should give you to $125, plus your freight should give you a total cost of $150. Now this is where you can choose if you'd like to, because right now we only have one batch available. So here I'm going to calculate my cost per item, which is going to be $1.50. Okay, because that is all I have and that's all I know. All right. So then now we're introducing to a second batch right here. The second batch that we're going to make a purchase of 100 toys for $1.28. And this time freight is $26. Okay, so in this case here, I made my proper journalization, right? And here I'm going to go ahead and record this piece of information here, bringing it back to my inventory worksheet. So again, 100 times 128 is going to give me 128. 128 plus 26 is going to give me 154. And this is where I determine, do I need to create a cost per item? You don't really have to, but I'm going to do it for practices only because I'm going to show you why it's unnecessary for you to have to do that extra step. Okay? So now we reach the end of our period, right? That's our total purchases that we made. So now I'm going to go ahead and total up my columns. Okay? So I know that I have 200 items. I know the total cost of it is going to be $253, and my purchase price is going to be $253, and I know that my total freight is going to be for $51, giving me a grand total cost of $304. Now, this is where this step is very important because now this time I'm only dealing with 200 items costing me a total of $304. Because I'm using weighted average, what I'm going to do is in this little empty column I have here under cost per item, I'm going to go ahead and calculate what 304 divided by 200 is going to be. And here I get an average cost of $1.52. Okay, so let's compare our information. The first batch I bought was $1.50. Second batch I bought was $1.54. So, I mean, looking at this, you can already sense that it's got to be somewhere between the 51 and 52 cents. And in this case, when I did solve for my total cost, which was 304, and I divided by the total quantity that I have available, I get an even amount of $1.52 as my average cost per item. So that is exactly why you don't need to take the extra step to calculate the cost per item, because at the end of the day, it doesn't matter. We're going to gather our total amounts and we're going to solve for an average cost instead at the very end. Okay? And that is it. So here I've recognized that you do need this average cost, right? So we apply it to our table, and we notice that here we entered in the 200 for the 253, making us a grand total of, again, with the freight included, we have a total of 200 items at $304, okay? Again, we recognize that at the end of the period, you need to have at least 80 toys left in inventory, okay? Now, how do I solve for my cost of goods? It's pretty straightforward. If I have 200 and I have at the end of the day 80, I'm going to be left with, I have sold 120 items, okay? Now, here is the cool part. Because we've already solved for our average cost per item, we don't care about what is going to be, which section that we're going to be taking. We're looking at the average cost. So in this case, here's my little inventory table that I've placed on the side. I know that for selling each of those 200 items, it's going to cost me $1.52. And my grand total should be $304. And in this case, I can just grab my whole total of 120 and just multiply it by the average cost per item, and I'm going to get a grand total of $182.40. So in this case, I only need to calculate once. All right? Once I've got that, I can easily solve for my ending balance, right? I just take it away from my goods available, and I get $121.60. Okay? Pretty easy, pretty straightforward. Don't need to think on which batch comes first or which batch comes next. Don't need to look for those numbers to associate each batch. You're only dealing with one number and one number only. And that's it. All right? Of course, we got to also know how to do our conversion entry as well. So same things apply, right? Now that we've solved for our cost of goods sold and our ending inventory, you're just going to apply it to the same journal, right? The conversion is taking your expenses and converting them into inventory. But you can't assume that all 200 items are available. So we're going to calculate, which we've already done, our total amount of inventory on hand versus the amount of items we actually sold. So in this case, there you go. All right? And then, of course, when we have beginning inventory, the great thing about beginning inventory is the number that you had previously will just cross right over with the same exact identical average cost per item. So you don't need to do anything too major. You don't need to calculate, add, or anything. You're just going to take that total amount and you just transfer over into the new inventory worksheet. So in this case, then we introduce you to a couple more items that we have available. Okay. So again, we plug in our numbers. Okay. In this case, we purchased another 100 items at $1.27. Okay, which gives us 127. Adding my freight of 25 should give you $152. Okay? Which I just did that for practices only. Okay? And then we bought another 100 items at $1.30, which should give us $130 plus my $26, which makes it $156, which makes it $1.56. Okay. Now, this is where if you do have beginning inventory, unfortunately, it's you do not need to calculate your average cost just yet. Okay. So we're just going to tally up our totals now because this isn't what we really have. We have to wait till we get our actual grand total amount and adjust it to the inventory. So in this case, I'm plugging in all my information. Once I get down to my total my total goods available, that is right here. So I've entered my information. I have beginning inventory. And now that I've calculated my grand total cost, so I should have 280 items available, okay? And with that 280, my total cost now is going to be for the $429.60. Now we need to make an additional calculation to solve for the new average cost per item, okay? So we're taking our beginning inventory, we're combining it with our net purchases to get a brand new total cost in a brand new quantity. And now we're going to solve for our brand new average cost per item, which here we recognize that our total for $429.60 is going to be divided by our 280, which is going to give us our new average cost per item of $1.5343, blah, 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 blah. Okay? Once I solve for this number here, whether I place it in my inventory workspace or not, this is going to be used to calculate your cost of goods sold. So in this case, I've recognized that I'm supposed to have $60 left on hand and that I've sold a total of 220. But that's okay. It doesn't matter how much we sell because at the end of the day, we're going to take that one number, which is our average cost per item, multiply it across to get a grand total of $337.54. So this, you only need to deal with one calculation. Okay? And once I do that, then I solve for my ending balance, which should be the $92.06. Okay? And with that, of course, we also have to, because we are completing our inventory worksheet, you have to complete your adjustment entry, okay? And that's where it is. Okay. So, to wrap up this entire chapter here, we are going to go ahead and take a look at what each costing method does and how it affects your business. So again, how you choose to determine what kind of costing method you're going to use is going to be, again, based on the items that you're actually selling and which method works best for you, okay? I can tell you most mom and pop shops would most likely use either or, but most major companies, they don't got the time to calculate the LIFO, FIFO, and especially if you're the inventory manager, imagine how many items you need to keep track of and understand, oh shoot, did I buy this one first or did I buy this one first? Having you do the inventory method, right? When we looked at our inventory, right? You have to be really good at it, like keeping track of which came first and which came last. Where did you leave off of, and how much did you have of each one, right? So for major corporations, they don't have time for that, and they think it's just easier to just combine them all together and just take an average cost, okay? And at the end of the day, right, if we choose FIFO, what you're going to notice is, because we did the same exact scenarios, if you notice for FIFO, we actually sold our cheaper items first, right? We got rid of our items that cost less first. And at the end of the day, when you reach your more expensive items, then of course your profit's going to be lower. Flip in reverse, if you choose LIFO, right, what you're going to do is you're going to get rid of all of the more expensive costing ones, and you're going to save the cheaper ones, and you're going to eventually get rid of the cheaper ones. So you're going to make a higher profit at the end of the day. Okay? Now, either way, for FIFO and LIFO, it doesn't matter at the end of the day, because whether you make purchases, same thing. The purchase is going to fluctuate every single time. You're never going to buy an item and it's going to stay constant for the rest of the day, right? For the rest of the years that you're in service and you're making the purchase for. Every day, it can change. It can change by a penny. It can change by 20 cents. Because the rules of supply and demand, right? So right now, you know what the Lysol wipes used to be like $2.99. Right now, you go buy it, it's freaking $5.99. Right? So it's going to be depending on the fluctuation of everything. And again, that's the concept of FIFO and LIFO, right? When you make your purchases, you always are going to be determined some kind of value. With weighted average, it's more like for items that you commonly use frequently. So that's why I gave the example for water bottles. It doesn't matter when you buy it, because at the end of the day, you're going to constantly be selling it. So in this case, you don't want to charge people too much money. You don't want to charge people less money either. And you don't really care for making a profit, because it's just water. So in this case, then if we don't really care about our profit there, then we'll just do an average cost per item, right? We're not gaining too much, and we're not losing too much either. We're just right in the middle. And that's what the difference between them are. And either or, whatever you use, the method that you use, at the end of the day, it's based on your business and what you actually are selling and what makes best sense for you as a company. Okay? Any questions in regards to looking at all three different types of costing methods and being able to do them?
None yet. I usually come with the questions when I'm actually doing the worksheets.
Got it.
Looking at it's different.
So, yes. Okay. Okay. Let me see, what time is it? Okay, so right now it is 2:21. I'm going to go ahead and call a quick break right now. And then we'll come back, and hopefully Michelle will come back.
All right.
Okay, so...